Helsinki-based Metso Outotec provides solutions and services for the minerals processing, aggregates and metals refining industries, employing around 15,000 people in more than 50 countries. I'm Sarah Rundell from Treasury Today, and in this editorial podcast I talk to Senior Vice President and Group Treasurer Minna Helppi on the role Treasury played during the June 2020 merger between Metso and Outotec, the company's supply chain finance programme, and how she is introducing sustainability in Treasury. Supply chain finance has come under the spotlight in the wake of the collapse of Greensill Capital, but Minna explains how it is a crucial financing instrument in her toolbox. In a recent development, she is also using the supply chain finance programme to encourage the company's long tail of suppliers to integrate sustainability. Minna, could you begin by explaining a little about the company?
Metso Outotec was formed last summer, by combining Metso Minerals part and then Outotec, that used to be our competitor. And it's a really huge transformation and a very big transaction also combining these two entities. And what we do is we provide equipment and services, wear parts and spare parts to our customers, which typically are either in the aggregates business or then in the mining business.
So how was Treasury involved in facilitating the merger?
What we've done is pretty much we've arranged all the funding for the transaction and also for kind of repaid all the ex-Outotec funding. And then we've also done a lot of kind of harmonizing and integrating and all that during these 2 years.
Thank you for that, Minna. Could you talk a little about your supply chain finance programme?
We have 2 different programs for different types of suppliers. So we have the traditional supply chain finance program for the bigger suppliers, and then dynamic discounting program for the smaller suppliers. And so if we talk about the kind of traditional supply chain finance, that provides the suppliers a possibility to receive the payment from Metso Outotec early. So if we have, let's say, payment terms of 90 days, they typically receive the payment in 10 days, let's say. So that really improves the cash flow and the liquidity and, of course, the ratios of those suppliers. And they'd be really keen on being onboarded on the program. And this program was established already on the Metso side, and we are just starting to onboard also the legacy Outotec suppliers to the program. But all in all, the kind of the reception of the program has been very good, and we are using the City platform. And we started the program with City only, and now we've added a couple of banks to the program in order to kind of be able to enlarge the program with new suppliers and new countries, and also kind of share the risk with the banks that we onboarded there as well. The program is global, and we have the program now live in quite many countries. So in Europe, in North America, in Australia, Brazil, China, and India. In our case, the banks are taking risk on Metso Outotec that are we going to pay when the payment is due? And typically that is kind of short term. The payment terms they are less than 1 year and very well below that. So that's not a long-term financing, it's short-term risk on Metso Outotec. And we are an investment grade rated company. So the risk should not be very high to the banks.
How does supply chain finance help your treasury function?
Our payment terms are still the long ones. Kind of even though the suppliers get their money fast, we still have the long payment terms. And of course that helps then on our side, it helps our working capital management and our liquidity as well as our ratios. For us, supply chain finance has been a good tool. And it has also been a good tool for our procurement to really deepen the relationship between our company, Metso Outotec, and then the suppliers. So it's kind of one more tool in the toolbox to be used in the relationship building with the suppliers. So it has been really win-win solution. So it's a win for the suppliers, it's a win for our procurement, and also for the Treasury. So we've been very happy with the program that we have.
Could you outline your reporting process around supply chain finance and if it's risky?
We do internal reporting at the moment, but externally we don't really report on this, on the program. But I would assume that, typically when there are cases like this, the Greensill case, typically then the regulation and the reporting requirements become more stringent. So I would expect that the regulators would require companies to report a lot more on their annual report, for example, regarding these programs than what is required at the moment. So there, of course, reporting requirements might become an issue. But of course, we do the internal reporting, so I don't think that it would be a big step for us to start reporting those externally as well if that was required. We've taken the risk into consideration when establishing the program, and also kind of we have a kind of a set limit how big a program we want it to be, the maximum amount that we would not want to exceed due to those risks. So the program for the banks that are involved is not committed program, so they could stop financing the suppliers anytime if they so wanted to. So in that case, it is a risk for us that if there was no financing, I would assume that many of the suppliers who are used to now having or obtaining their payments very early, they would start negotiating shorter payment terms than we actually have in the contracts currently. Mm-hmm. So of course, that would then kind of have an impact on our working capital and liquidity and all that. So of course we do need to be mindful of those risks and take that into consideration when planning the program.
Thank you, Minna. Next, I'd like to talk about how you're integrating sustainability into your supply chain finance program and more broadly in your treasury function.
In supply chain finance, actually, we've started discussing with the banks if we could kind of have a sustainable supply chain finance, in the sense that we are also discussing with our suppliers on their footprint and their emission levels, etc. So kind of if we could have for the more sustainable suppliers, if we could have a lower price on the supply chain financing. We also discussed that with the banks and our sustainability team. In addition to that, we've started to prepare a sustainability-linked finance framework that will be published later this year. And with the framework, we're also starting to tie or link our funding arrangements, whether they are bilateral loans with our banks or our syndicated revolving credit facility, or potentially issuing also bonds that would have sustainability-linked KPIs in them.
Have you started to talk to your suppliers about sustainable supply chain finance?
Yeah, our sustainability team is talking with the suppliers regarding the KPIs that we would set to them, and they would need to then reduce their, for example, carbon footprint or things like that. And our sustainability team is taking care of that. But we haven't yet started talking about linking those topics to the price of the financing, since we're still negotiating with the bank.
What kind of pressure do you face from your investors to integrate sustainability?
If we talk about debt investors and also about our banks, then there the kind of, I wouldn't say pressure, but one can see that there is a lot of interest on the sustainability related topics. And now that sustainability really is in the core of our strategy, that is also seen as a very, very positive thing with, for example, with banks or with debt investors. And I believe that if in the future we are issuing a sustainability-linked bond, I'm sure that there will be a lot of demand.
Lastly, what demand are you seeing from your customers to integrate sustainability?
We believe that with our, for example, with our equipment, we can really help our customers to reduce their footprint. For example, for mining companies, it's very important to have energy efficiency and less pollution and less use of energy and all that. Those are very important topics to our customers, and that's why, of course, also when we do product development, we really pay attention to energy efficiency and water efficiency, etc. In order to be really helping out our customers in the problems that they have also.
Minna, thank you so much.
Yeah, thank you, Sarah.
You've been listening to an editorial podcast with Minna Helppi, Head of Treasury at Finland's Metso Outotec, and me, Sarah Rundell. Don't forget to subscribe to the Treasury Today podcast channel to get further episodes in this series. You can find us wherever you get your podcasts.